All right, thanks everyone. If everyone at home could hear me, could you guys let me know? Is that Bill's? That's Bill's computer, right? Hear this? Let's try this. All right, can everybody at home hear me? And if you can, there, isn't it? Is it Roy? Do you mind? I thought I just muted that computer. Do you mind just, sorry guys, I'm just trying to get worked out here. Apparently I did not mute it. You got it? Perfect. Thank you. All right. I am hanging out in Atlanta with a super fun group of people. You guys want to say hi? Hi. Look, I wish you guys all wish you were here, don't you? All right. So as I get going, I have to go through this exciting disclaimer real quickly. Just letting you know I'm not a registered broker-dealer, and it means that I don't give individualized trading advice or recommendations, just education purposes. I talk through the pattern. I teach you how to deal with charts, and I always encourage you to paper trade first before you ever start moving into any real money positions. So that is the deal. Now with that, let's get rid of this and switch over to charts. Okay, so what you're going to look at right here, you'll see it in 2 seconds. All right, so what you're going to see right here, there we go, is this is Extreme Charts. So this is a daily charting service. So this is what I use mostly when the markets are closed to really dig in and do my research. So I start here, and I'll zoom in for you guys. The first thing that we want to do at the end of the day is look at the biggest, probably the biggest, most watched index that we have, which is the S&P 500. And what that does is it gives us a big feel for, big overall kind of feel for what's going on in the markets. Now, we have been trading this market that has been quite bullish for a while here. And we are finally, bringing a drawing tool here, we're finally starting to see our first, in listen-only mode. All right, we are finally seeing our first good retracement. So markets have been up 1, 2, 3, 4, 5, 6, 7, 8, 9, about 9 days in a row that we didn't have much in the way of retracement. So I'm talking this part right here. Finally today, I'm looking at this as a better retracement than what we've seen so far. And do you know why? Would you like me to share? This candle today, and I know you guys at home are spotting this, it is pretty much an engulfing candle. What that means is today's candle body, remember the candle body, learned that today, is engulfing yesterday's bullish candle body. And Smart Alex Scott at home said, because it actually closed down. Thank you, Scott. Yes, it did close down. But our previous bearish candles, and I'm just talking, in this piece right here, just this month so far, our bearish candles were very, very small candle bodies, right? Mostly almost just sideways days. That's a form of a retracement. It's the market's taking a break, but it's a little more bullish of a retracement in a lot of ways. And today is the first day that we're actually seeing a good bearish close. Now, there is something that I'll talk a lot about, and it is the day count. And the day count is it's a guideline that stocks typically will move up, so in the direction of the trend, which is more bullish now, they'll go up usually 3, 4, 5 days in a row. And when they retrace, they usually retrace 1, 2, or 3 days in a row. So, and another thing that is really important to remember when you are looking at charts, this is not a crystal ball. We all want that. I want something that will tell me exactly what the markets are going to do tomorrow, don't you? Yeah, well, we're going to have to get over that because there is no such a thing. But what charting does for us is it helps us figure out kind of some really good trading parameters, right? So I may not know exactly what the markets are going to do tomorrow, but I have a pretty good idea that once stocks start to retrace, it's pretty typical to get maybe another day or two of retracement, because we usually see 1, 2, or 3 days. So that's the first thing that I start thinking about. And where the index is just the other thing too, the index is far away from this blue line, which is a 10 exponential moving average. So just if I come in here and just erase most of these lines, just look at the space. Let me see if this highlighter will show up here. Can you just see the space from that 10 moving average to the price graph? It's pretty far away, and stocks have a tendency, and the indexes as well, to get stretched out and stretched away from the averages, and then they tend to come back to them. And then they stretch out again, and then they tend to come back. And so we're kind of in that stretched out part. Day one of a retracement, it could come down another day or two more. So I'm thinking about that. I'm thinking that if it is going to come down, what types of, well, how would we want to trade? Puts? Maybe trade something bearishly, right? But here's the other thing. If stocks have far enough to come back, we could make money on the downside. You can buy a put option and make money as the stocks come down, but you want to think about how far it has to pull back before that next support level. And in the case of the S&P, we're looking at a lot of support around that 2151 area. So we could trade bearishly, but do you want to go in and long-term go bearish? No, because we're thinking it could come down 1, 2, or 3 days, right? So if the markets do come down 1, 2, or 3 days, if the S&P retraces down to that 10 moving average, we then have a place to start looking for bullish positions on the bounce. Now, as we go through our charts tonight, because of where the markets are, I'm going to look for stocks that have room to sell off enough that we could make money on the way down. So it's one pattern I'm looking for. And then I'm going to look for stocks that have already pulled back. Because do you think everything moves exactly with the S&P? No. Some stocks lead, sometimes some stocks will lag a little bit. So I want to find stocks that have already pulled back. And if there are stocks that are in an uptrend that have already pulled back, they may be closer to bouncing. And if they are going to bounce and move higher, that gives us a place to move into some kind of a bullish position. And we'll look at maybe calls or whatever bullish position you prefer. But that's kind of big picture what I'm thinking as I look through these charts. Now, right off the bat, if the S&P tomorrow stays below today's closing price, it's going to confirm that we are probably in the second day of the retracement. If, however, we see a whole lot of buying pressure, here's a level you need to be aware of. If the markets push higher tomorrow, and if they make it, the level I'm going to go with is, put a line. I want to go with right here. I'm trying to draw a line at yesterday's opening price. Because yesterday was kind of a breakout day where the S&P closed at some new highs. And now we're back here again today seeing a pullback. So that line that I just drew, if the S&P can make it up above that, that tells us things are more bullish than we thought. And at that point, instead of expecting another day or two of retracement, that would be the point on the S&P that would tell us, hey, go ahead and start looking for more of your bullish positions. Make sense? Yes. Okay, so that's what I'm looking at, that line on the S&P. If the markets move above, and that line is around 2166, if the markets move above that, I'm going to have a little more of a bullish focus for tomorrow. If the markets stay below the closing price today, I'm going to have more of a short-term bearish focus. And then, so that's my big overall trading idea, kind of plan from the markets. Now what we can do is we're going to move into the watch list of stocks that I have, and I'm going to look at individual stocks, and we're going to kind of fine-tune the trading plan as it pertains to the different stocks in the different sectors. Okay, so this is always the first step in my researching every night, is to start here. Now I've got a watch list of stocks, and you guys here in class, I can show you how I do this more tomorrow if you'd like to see, but I have some scans that I use here with Extreme Charts, and I run through the scans and find stocks that seem to be stronger at more tradable levels, and I flag those, and I come up with this watch list. So tonight what we're going to go through is 12 of my favorite stocks right now for the next few days. Okay, so we're going to go through here and figure out, do we have something to trade or not? Okay, so zooming in a little bit. This is Apple Computer, not Apple Computer anymore, Apple Inc. What do you think? Anybody like this? I love this. And what I love about Apple right now is that we have this big reversal type candle today. And you know what I mean by that? Oops. It spiked up quite a ways today, didn't it? And then what happened? It could not stay there, right? It failed. So we've got a stock that at one point was really, really bullish today. And then by the end of the day, who won? The bears. You can absolutely tell that the bears came in and took over, right? All right, now I just accidentally erased my earnings date. What I like to do is I go in and I'll check earnings and I will put the date on my chart. The cool thing about having something like Extreme Charts is you can put notes on your charts, and I would encourage you to do that because it helps you remember what you were thinking or what, you know, a trading event or something coming up. Earnings is obviously really important to know because can stocks gap on earnings? Yes, we talked about that earlier. Stocks can move quite a bit on earnings, and you don't want to be caught off guard. And there are ways to trade around earnings as well. So Apple doesn't announce till next week. So looking at Apple, we've had a big upward move. They broke out briefly to a new high, and then they sold off. Now, I'll show you another level here. Our previous high on Apple is right there, as far as closing prices. Okay, so there's my horizontal line. Apple made it that high yesterday and sold off. It made one more attempt to move higher today, and then it sold off from that level. This candle today looks a lot more bearish on Apple. Now, do we know for sure that Apple is going to break down from this one candle? No. I mean, it could, but what we know right now is it is a little bit overextended, isn't it? It is extended, and it's further away from its 10 moving average. So this is where, for tomorrow, one of the stocks that I'm thinking about is if the markets are bearish tomorrow, I don't mind the idea of jumping in and looking for a put position that we could trade on Apple to trade it from the close somewhere down closer to this 10 exponential moving average. By the way, that's at 98.57. So you're basically talking about, if we're buying puts below the close, let's call it around 99.40 or so, and if it sells off down to about 98.55, not even quite a dollar movement there. Now, in a lot of stocks, that's not enough room to make money or much money, sometimes just break even. But with Apple, the options are really inexpensive, and the spreads, right, the difference between the bid and the ask, the spreads are really narrow, a lot of times just a couple pennies or so. So you can actually make money on just a dollar movement on this stock. So if the markets are bearish, this is one that I like the idea of looking at tomorrow. Now this is where you can jump over to something like this. What you're looking at here is it's called an intraday chart, and this is a 5-minute candlestick chart of Apple today. So that long wick that you saw at the top of the chart, you can see where that was created today. And it was created in the first 20 minutes of trading right here. Okay, so that was it. So for 20 minutes this morning, Apple was bullish, and the rest of the day, what did it do? It was bearish. Yeah, so I mean, to me, that tells us something about what was going on today, that really it was a pretty bearish move. Now, we can look at this for you guys at home, and you guys here who trade a little bit more. One thing that you may have noticed, today was actually a really cool day trade on Apple. I don't do a lot. I mean, I'd rather get in a longer trade, a longer swing trade or a trending trade. But when you have some momentum there and you have some opportunity to day trade it, I'm not opposed to it either. But Apple this morning, if you look at that very first candle, okay, right there, the green candle on the right side of the chart, that was the first 5-minute candle of the day. Apple opened down, it rallied, it closed right at that upper band. The next candle as it started to rally, that is an entry. No, and here's the thing: is the way that I teach trading is that right, after that first 5-minute candle is formed, you can get in on that second candle. So ideally, you're in near the bottom of that second candle. So let's call it about $110. Right about there is 110. Okay, so we're in where my crosshair is, somewhere once the stock starts moving on that second candle. The only reason I don't do a lot in that first candle is markets are pretty volatile right there. And it's hard to get a good feel for what direction things may move. So second candle, we have that confirmation. It's up second candle, the third candle. Check that out, it continues to move. Fourth candle, now what has happened? Okay, I was just gonna say, you guys here who are, some of you even brand new, we talked just about a little bit of technicals, you guys are already spotting it, right? One of the things we talked about today was the size of the candle body. It's getting smaller. That tells us that the buying pressure is slowing down. So if you did this as a day trade and you bought call options and you see that the stock is starting to slow down, what could you do for your stops? Snug them up. And I'll tell you, one of the things that I do, I'll go right with the bottom of that candle body, that small candle body, because the stock may even go sideways and then push higher again. Just because it has a small candle doesn't mean it's coming down, but you do see that something is changing. And that idea right there is what you get from the charts. Something is changing. And if you know something is changing, then you can handle your trade. And in this case, it would be tightening your stops up. So then on the next candle, look at that. It's a bearish engulfing, which means you would be out. It's just right below that 101 area, right as that stock drops below our small green candle body. That would be a day trading exit. And that's enough room to make money on a stock like Apple. And then, I'm sorry, what? How much of the time frame was it? This was, so each candlestick is 5 minutes. So if we say we're entering, let's say 6-7 minutes into the day right here, you've got basically 3 5-minute candles, so you're 15 to 20 minutes in. And what was the total spread as far as the price movement? We're talking an entry probably around anywhere from that 104 to 110, and then an exit at 190. Wow. Yeah, in 15 minutes, right? So on that, and so we're talking, I mean, if you look at this, and we'll get into options more tomorrow. We'll look at the price of options. What makes this a doable trade with Apple if you're trading call options is that you can buy your calls, they're inexpensive, and you can sell them for not a lot of money. And here, if you guys want, let me just show you. You want to see it? Just to give you an idea, because it's not price-wise, it's not a huge movement. Let me get my option chain running here and I'll show you. So price-wise, you're talking about, conservatively, probably about 80 cents right there. And remember, that's the thing with day trading. There's probably not as much money to be made day trading as, hanging on a little bit longer and catching a swing trade or trend trade. But when you have a day trade and you have that pattern there, if you are the person that likes to day trade, take advantage of it. And then we wait for a pullback on Apple for our next swing trade or a longer trade where we'll be in more than just 15 minutes, right? But just to give you an idea of how much those options are priced at, right now, if we were to buy, and let's say slightly in the money option, the spread goes from, we've got a 4-penny spread on one. Yeah, actually both of these, they're about 4 pennies right now on Apple. And you'll see that vary, and out of the money option to buy the 100 call on Apple is a 2-penny spread, which means you could buy, and these options expired this Friday, you could buy a 100 strike price call option on Apple for 16 cents. You could turn around and sell it for 14 cents. Now, I know we're not going to, right? The point is, you're only 2 pennies slippage on the spread there. Now, if you want to go in the money, our 99.50 call option, you're dealing with 35 cents to buy and 31 cents to sell. So there's a 4-penny spread. But you see what I'm saying? They're not very expensive, and the spreads are really narrow, and that's how you can make money on a 50, 60, 70, 80-cent move on a stock, is because you're not much slippage between the bid and the ask. So I won't beat that to death, but it gives you an idea of what we're looking at. And then the rest of the day, and there are other places we can look at this tomorrow, but to me, there are places here where the Apple chart turned around to a very bearish pattern, and the biggest signal came right over here on the left of that chart when it broke down below that 10 moving average. So the technical tools that I'll teach you to use on a daily chart, where every candle represents one day, you can also use it on these 5-minute charts. And that piece where Apple turned bearish there, that was around $100.60, and it closed at $99.41. So, another chunk on the way down. So this is something that you can learn to take advantage of, these turning points. All right, so let me jump over here. I'll come back to the daily chart because I wanted to show you where that wick was and show you that it wasn't there for very long, which to me is more bearish, meaning the stock rallied for a little bit and it just couldn't stay there for long. It's a more bearish pattern. So now, if there is more retracement in the market tomorrow, so if the S&P is going down, this is a stock that has some room to come back, and this may be another day trading bearish candidate. Not for long, it's just a little bit of room that it could come down to the 10 moving average. But if the markets are weak, this is something to look at. Now, if the markets turn around and rally, and let's say we have a whole lot of momentum and a lot of bullish momentum in the overall markets tomorrow, because it could happen, right? It could be news, or it could just be that all of a sudden everybody thinks the markets are cheap enough and they come buying. So if we have that, at what point on the Apple chart do you think it looks bullish? And bullish enough to trade. Anybody at home? What are you guys thinking? Let me just show you. So remember how today on the S&P, the thing that told me that it was bearish, and also our exit on the Apple chart out of calls, was that engulfing candle, right? When a candle body, the next candle body is bigger than the previous candle body. So that's kind of what I'm looking at right here. If the markets are strong, and if Apple trades up above the opening price, that's the candle body. If it trades above the open right there, that tells me that, even if I think Apple should come down, it's not. It tells me it's not coming down, and so I can't tell the markets what to do, no matter how much you may try. They won't listen. They're just like my kids. So they're not going to listen to you, so you just have to trade what you see. Now, Carolina here at home, I love it. She's picking up on another thing. If Apple goes up tomorrow without coming down any further, and if it forms a bullish engulfing candle, moving above today's opening price, right where my crosshair is sitting, that is a place to buy calls. And at that point, that will be confirmation of kind of a cool little thing here. That red line that I've just added is a 5 exponential moving average. Now, every once in a while, stocks will trend around a 5. So right now, Apple closed today at that moving average. If it bounces tomorrow, that tells us that this 5 is the new support. So how cool is that? So now, but we don't know that until we see if it can bounce, because it may go down right through the 5. But if it bounces tomorrow and it forms this bullish engulfing candle, we can buy, let's say, a call option, and you know that it's the 5 moving average that is now support. So that could be your stop. Kind of cool? All right. Very nice. So we've got a trading idea for Apple. And then we've got Amazon. Now, what do you think about Amazon? You like it? They have done really well, and they've been more bullish than the overall markets. Today's a little bit of a weird day because we see a gap up today and then a sell-off. It's almost bearish engulfing. So let me erase some of these lines so you can see here. So one of the things that I notice on Amazon is that it pulled back today, and it hasn't moved above the last high. So stocks in an uptrend need to make higher highs. So I'm starting to get a little bit suspect here, a little bit nervous about Amazon because of today's sell-off. I like that it's closed at yesterday's opening price. This can sometimes be a little bit of support. So I like to give things, another day, and let's see if it can push higher. If it stays above the closing, where, right here, let me put this line. If it stays above these two candle bodies, then we're okay. And Amazon, if it's pushing higher, it becomes more likely that it will push up to a higher high. Now, they have earnings next week too. So we're kind of, trading here against the clock, because on the 28th, when they announce earnings, if you are a short-term trader, you don't want to be in a directional call or put trade. You need to be in a hedged position so you can handle any gaps, or you just get out of the trades. Anymore, I just like getting out of trades before earnings, just to be safe. And then we can always get back in after, right? But as a trader, you run the risk that the stock is going to gap against you, and that's really hard to come back from. So just don't hold over earnings. So Carolina, she has a call, so it's going up. So yeah, so Amazon is at that point that it's at a support, and that if the buyers do move into the markets tomorrow, and if it can trade up above the closing price, this could give us a place to buy calls on Amazon. Now, if it pulls back, now here's the tricky part. If Amazon pulls back, it's still in an uptrending pattern. Just see how overall it's been making higher highs and higher lows. So if it pulls back, it still has all the way down to right here, this moving average, which is a 20 exponential moving average, that it can trade down to and still technically be bullish. So this is where that retracement trading comes into play. And this is where, if the markets are bearish tomorrow and Amazon is pulling back, we could move in and look at your practice trading, buying some put options right as it drops below. I'd probably almost go with the low price today. Right as it drops below that level, buy a put option to trade that retracement down, because it becomes more likely the stock then could come down to one of the moving averages. Now, if it bounces, then we'll do the same thing here that we would do with Apple, because if it bounces after a retracement like today and it doesn't touch the 10 moving average, you'll notice that's where that 5 moving average is going to come into play again. So we use the 5 moving average not on all stocks, but just mostly on the faster stocks. Okay, so I think Amazon is one that we want to watch tomorrow. Also, have you heard of this stock? This is Boeing. Boeing? So ticker symbol BA. Yes, I flew in on one of their planes. And Sylvia wishes she was on one of their planes. Poor Sylvia has been stuck with that Southwest thing. She's been stuck all day in the airport. All right, but what I'm looking at on Boeing is they have earnings next week as well, but they also retraced today with the markets. We're going to see a lot of stocks looking like this that have pulled back. But what I'm most interested in is where they've retraced to. And do you see that red line right there? Do you know what that is? It is a 200 simple moving average. Now, a lot of traders and investors use this. You'll hear them on CNBC talk about a 200 moving average. The reason that it's important is that it sometimes has a tendency to act as support or resistance for a stock. So I don't know what's going to happen, but I'm looking at a couple things here. On the pullback today, volume wasn't very big. So look at this. Look at the volume bar on that far right side. So that's today's volume. It's a lot lower than what we've seen on previous days. Now, if you have low volume and the stock is coming down, well, this is where it gets tricky. Stock is coming down, which is bearish, but if it's a really strong sell-off, you should expect volume to be bigger, right? So, see, now I've just taught you an indicator. When volume is low and the stock's coming down, it's not as bearish. It actually starts to almost be a little more bullish. So to me, what this says is, hey, there is a chance that 200 could hold this support. I don't know if it will. I don't even like to pretend that I know if it will. But I do know that if it does hold this support and people like Boeing stock, what will happen tomorrow? It'll go up because people are going to start buying it. And they're going to say, hey, I love Boeing. I think it's a great company. I'm going to start investing in it. That buying pressure will cause the stock to go up. So I don't know if it's going to or not, but I do know if it does go up, that tells me the 200 moving average is support, and we could look at this as a place to buy calls. Now, if it breaks down below the 200, then I know people aren't liking it so much. And then you could decide if you want to buy puts on it or not. I think we probably have better candidates for that, honestly. But Boeing has been a little bit range bound. If you'll notice, it's doing a lot of choppiness. It swings down, it swings up, it swings down and up and down. And these stocks, you could do some channeling trades on them if you want. What I'm curious about right here, I want to see this pattern, I want to see if this 200 holds the support. What it could do is it could be the beginning of an uptrend. I don't know if that yellow highlight shows up very much. Because this is another cool thing. In the world of technicals, and I know you guys at home are used to me saying this, but check this out. If the stock rallies like we've had, I'm just trying to put a little highlighter here over it, or a pink colored pen. If it rallies like it has and then retraces, if this level holds as support and the buyers move in, this is what the beginning of an uptrend looks like. See how cool that is? Now, I don't know. Again, we come back to the charts. We don't know for sure if it's going to trend higher, but if the buyers come in here, it's more likely to be that kind of an uptrending pattern. So that would be the reason to buy calls here, if it holds its support. And this is I love it. It took me a while to get to the point that I love this, but I always wanted that perfect answer. Give me the crystal ball. Tell me what the stock is doing tomorrow. And in fact, I have a funny story I'll tell you about that. Well, all right, I'll give you the quick nutshell version. These guys at home have heard it, so I won't take long. But there was a guy that, as I was learning to trade, he always bought at the very bottom, sold at the very top, every single time. Always. His trading was impeccable. It was amazing. He was the guy that drove me to figure out how to chart better, because he always knew what to do. And then one day he came up to me and he said, he showed me a chart of a stock that was, I can't even remember the stock. And he said, oh yeah, I bought calls here at the very bottom. I sold them at the very top. Why didn't you do that trade? And I looked at it and thought, wow, how does he do this? And then I started digging into the chart and I looked at more time. It had only been trading for about a month to 2 months. And he was telling me he bought calls. Now, this is back in the 90s when you can, first of all, I was 12 years old. Second, just in case you've forgotten. Second, it took about 3 months for stocks to become optionable. When they were brand new IPOs, they had to trade for 3 months before they ever had options written on them. Now it happens much faster. It could be a matter of weeks. Super fast now. It gets faster all the time. But the stock, now think through this, it had been trading for about a month and a half to 2 months. He bought calls at the bottom and sold them at the top. You see where I'm going? The stock was not optionable yet. There were no calls to buy. There were no calls to sell. He was lying. And then I realized he had flat out been lying to me. All these trades that he did with these perfect entries and perfect exits, and he knew what these stocks were going to do, he was lying. And I looked at him and I said, there aren't options on this stock yet. And his face turned red and he turned and walked away. But I'll tell you, that was such a relief for me, because I had been trying so hard to be as good as he was. And I had been trying so hard to get these perfect entries. And it did make me a better trader. It honestly did. But then that was like a burden lifted off my shoulders, because I realized there's no such thing as a perfect trade. I mean, you're allowed to do one in your lifetime and then that's it. If you get one and then you're done. But it does happen that you can catch a chunk of the middle, and that is reasonable and that is doable. Don't try to think that something is going to tell you exactly what the stock is going to do tomorrow. We need to just set up our trading parameters, is what I call it. We look at the chart, we have a pretty good idea. I don't know what the stock's going to do tomorrow. I don't have to know. But I do know that if it starts to move up above today's closing price, that's more bullish, especially because of where it's at, because it's right at a support level. So that buying pressure and the stock moving up tells me that, yes, that support is holding, then I can buy calls. And, unlike Robert, I am not buying at the very, very low price. I won't be buying at the very, very bottom penny of that stock and selling at the very, very top. But I could get maybe a chunk of the middle of that. Is that okay? And unlike Robert, these could be real, they're real trades or real practice trades, whatever it is, but it's real. It's not this fake world. So trading, I want to teach you the real world of trading. And it's fun and it's exciting, but you gotta be realistic as well. Oh, seriously, Carolina just messed up our trade. Just kidding. Carolina is saying after hours, Boeing dropped to 131. They didn't have accidentally announced earnings today, did they? Because what that puts it way down here around that 20 exponential moving average. So a big drop. Now, it's likely for a move like that, it's some kind of news likely, and it could be another one of these aerospace stocks. Like Lockheed Martin sometimes will announce and move Boeing, or could be they had just an announcement of themselves. Sometimes they'll pre-announce. So you could check and dig in and see what that is, but really it's sort of irrelevant in a way, because after hours trading, we see it's down. Oh, and now she just said it's up again. Oh my gosh, you see, Carolina, you should be here with us. So see, now it's up again. So who knows? So I don't worry a lot about after hours trading. It kind of gives us an idea of where the stock may be. I don't want you to get too focused on it and too, worried about it, because this is light volume trading and we're not going to be trading these markets. What mostly matters is where's the stock going to open tomorrow. And if it opens and it's bouncing above this 200, we have a place to get in. And if it's selling off, we aren't getting in. I just double checked. Their earnings are still confirmed for next week on the 27th. Okay, so it's a trading idea, and if there's something weird going on with the stock, maybe this won't play out. But is that okay? Yeah, because what we're doing is we're coming up with trading ideas. So these are my trading ideas for when the market opens tomorrow. All right, so next, CMG. Let's see, so this is Chipotle. And Chipotle, and I keep asking the guys at home here somebody to go eat there and get sick, so we have a big sell-off again in the stock, and nobody has volunteered yet. So if any of you want to, feel free. Just let us know first. So they have, the reason they're on my list right now is because their earnings are tonight. And so they have chopped around. They started getting very, very sideways, and you can look at the moving averages and see that they're kind of sideways now, and that tells you. But these guys announcing earnings tonight can create some opportunity for us tomorrow. Did you know that? So we could possibly trade a post-earnings move tomorrow. Now, so far, let me see what they're doing after hours. I'm seeing down about $5, so trading around 412. So they're actually trading somewhere close to their 10 exponential moving average. So the first day after earnings, we have a tendency for things to get pretty volatile. So this is a stock to look at tomorrow for those of you that are day traders, really, to see if there is a day trading opportunity. And you're basically looking at trading a break out of that first 5-minute candle. So wherever the stock goes in the morning, probably it'll be going down, but you never know for sure, because I have seen stocks that were down after hours after announcing earnings, and by the next morning they actually opened up. So it's unusual, but it could happen. So we look at where it opens tomorrow, and you're watching for a breakout of the first 5-minute candle to trade Chipotle, and then of course that's where your 5-minute chart comes into play, and this is where you'll move over to a trade station or your intraday charting, whatever you're using. Okay, Facebook. Loved this one today. So Facebook also has that bearish engulfing kind of a candle today. And Facebook is a lot like Apple, where their options have some pretty nice spreads. So let me switch over here. Look at the option chain on Facebook. Let's see, we just look at something like the 120 calls are 83 by 87 cents. 121 calls are 29 cents by 31 cents. So that's really nice, because you're dealing with just a 2-penny spread. And then because it's more bearish today, I also want to look at the put options, and the put options are trading at 68 cents by 71 cents. And I'm looking at the 121 puts. So we've got a $3 spread, or a $3 spread on those put options, which means you get in, you buy, and even worst case scenario, if you have to stop out right away, you're just, that 3 pennies is all you're really losing, that and commissions. right? So that's where that spread comes into play a lot. Did you have a question?
How big of a spread, or when would you improve the event? Did you look for 15 cents?
Yeah, where's the,
6 or 7 cents?
yeah, question here in class, where is the limit on my spread? How high will I go? And you know what, to answer that, it really comes down to how volatile the stock is. So with stock that moves a lot more, we can maybe afford to go with a wider spread. And volatile stocks naturally will have wider spreads. So, you know, it's good and bad. It means you've got a more active stock. Part of the reason these spreads are so narrow is that they're kind of slow these days. But I'm looking for a 30-cent spread, probably at the high end, and then I will make exceptions on stocks that are like the Googles and Amazon and Chipotle and some of those that are more active. I'll be willing to go higher on the spread, but only on those stocks that I'm comfortable trading, that have good, you know, a good history of performance, and that move a lot. Because, you know, where Apple, I showed you today, was moving 80 cents, you look at, you know, something like that on an Amazon, and that could be a $2, $3, $4 move often. And we'll talk more about that tomorrow, okay? Yeah. So what expirations are we looking at? For right now, anything that's a day trade, you're looking at front week options, which mean they expired this Friday. Yep, and then anything that is going to be a longer trade, a swing trade or a trending trade, we're going to need to go out more time. But right now, I'm just looking at options that expire tomorrow just to get an idea of what the spreads are. Yeah. Facebook? Oh, Chipotle. Yep, so I looked at Boeing and then Chipotle, then Facebook. So my thinking with Facebook, because it is a bearish engulfing candle, it has extended away from the moving averages. And this, by the way, is fitting right into the day count, right? So Facebook was up 1, 2, 3 days, small candle body, and today is our first retracement day. Remind me tomorrow, and I'll show you this entry on Chipotle, because this was so awesome when it bounced here on Monday. Really good bullish entry. Today was an exit as it became a bearish engulfing candle. That move, by the way, was a trade somewhere in that 117.50 as an entry, and then out around 121 and change. So this was closer to a $3.50 to $4 move in your favor over just 3.5 days of trading. These are the kinds of trades that I love. This is a lot more fun than a day trade. It's not as hard. Day trading is difficult. You got to sit right there at your charts. You're watching for every little move. This stuff, when you find these nice swing trades, it's great. So, and I'll show you tomorrow more of what we're looking for on those. But what I'm thinking, Facebook has our first pullback day today. We know that it could retrace maybe 1 or 2 more days, right? Because retracements are typically 1, 2, or 3 days. So let's let it pull back and see if it could bounce around the 10 moving average again for another entry, just like we had on Monday. In the meantime, tomorrow's Friday. The cool thing about a Friday, it's my favorite day of the week to day trade, because options are so inexpensive, because you're only buying 1 day of time. So if you buy an option that expires Friday, you're paying for 1 day, right? And your deltas are a lot better. So what I'm thinking on Facebook, if we do have a down day in the markets tomorrow, I love the idea of looking for a day trade on Facebook buying puts. And I'm going to hopefully trade that down toward that 10 exponential moving average. Okay, so this is a great idea for tomorrow. Google is a very similar pattern. Now the difference with this stock, and here, I like to draw my lines, so, and you guys may want to practice this as well. Put lines on your charts where you're thinking about trading it, so when you look at your chart the next day, if you've researched at night, look at your chart the next day and you can glance and you remember what you were thinking the night before. Because if you're like me, you just could totally forget from one day to the next. So there you go. But the thing with Google, you see where they're trending? I just added that 5 exponential moving average. That is an average that is holding more support. So this is a stock that is volatile enough that it could move even from here down to the 5 moving average. That is, what is that? So I have to do math. We're about 750. We're about $3.50 or so. And we know if you buy a put option and that stock sells off $3, is your put going to be more valuable? Though, yeah, absolutely. So this is something that I'm looking at for a day trade on puts, with puts tomorrow on Google, just looking for it to sell off below the closing price. And this is, once we get ready for that, I will switch over to the intraday charts. And so here we are back to a 5-minute chart. And you'll notice that at the end of the day today, on those last 5 minutes, see how Google shot up? They have that big bullish candle right at the end of the day. One of the things you might want to look at tomorrow, if the markets are breaking down, look for a drop below this upper Bollinger Band. And you guys at home know what I'm talking about. But this has something to do with a strategy called the Bollinger Band squeeze play. And when you have a breakout of the bands, and these lines, the lines that kind of outside the price graph, these are Bollinger Bands. When a stock breaks out, it should keep moving. If it doesn't, it's a failed squeeze play. So if you're confused, don't worry about it. I'll show you tomorrow. But just the fact that the stock drops back below this upper band right here, that means it's more likely to push a lot lower and more likely to come down to even the lower band. By the way, you're talking almost a couple of dollars of movement there. Okay, so let me give you a price and we can check this out tomorrow. So possible failed Bollinger Band squeeze play. Basically, you're looking at a drop below 753.74. And that's where the 5-minute chart starts to look bearish tomorrow. And then we'll look where the market's open and kind of adjust this if we need to. But the general idea here is that Google is a stock that has moved up several days. We have 1 day of retracement. If the markets are bearish, this is more likely to come down because it has room to come down. Now we also have to think through, what if the markets end up being super bullish tomorrow? Is there a chance that we only have 1 retracement day here? Yeah, there is. And so you also want to think through, if the markets are bullish, is this a stock that we want to trade? And if it is, at what point does this chart begin to look bullish again? What do you guys think? For one, you could say above today's bearish candle body. If we have a bullish engulfing candle, it's bullish. Right? Bullish engulfing candle is bullish. Does that make sense? But the problem with that is that it is $4 away. I don't want to wait and buy calls if after this stock is rallied a full $4. I'd rather take advantage of that $4 run. So this is one, if the markets are very strong and moving up at the open, I think we look at a stock like Google to buy calls. If it trades, you want to get it above the closing price. So it's kind of in that 754 area, just above that. And the reason for the call side on this trade is because this is a stock that's still trending above a 5-moving average. And the pullback today brought it back close to that level. So now I've just got some trading ideas. And again, I'm no Robert. I always say I won't say his name, and then I just say it because I forget. But I'm no Robert who perfect, trades to the penny. But I have a pretty good idea that if it goes up tomorrow, this 5-moving average is more likely to hold as some support. All right, so that's another trading idea for tomorrow. And then I've got another one here called Goldman Sachs. The thing with Goldman Sachs is they just broke down under their 5 exponential moving average today. Now, the first thing I have to look at, it looks like a stock that's retracing, but the first thing we have to tell is there enough room if it only comes down to the next support level? Is there enough room for us to make money? Well, the close today is at 160. The 10 moving average is at 158 and change. It's $2. So yeah, there's enough room there. Something like Goldman Sachs, if it was maybe just $1, probably not. But with $2 of movement there, this is tradable. So the kind of the play today is that being the first day that the markets have really started their pullback, we have a lot of stocks that look like this. So for tomorrow, if I were just to sum up a trading plan for tomorrow, it's take these stocks that have started to retrace. If the markets are down tomorrow, let's look for some bearish day trades. And then I'm going to look for stocks that support and consider, if the markets do bounce, consider some bullish, even swing trades. It could be a little bit of a longer trade on the call side of things. But Goldman Sachs, has room to drop. So if it sells off and the markets are bearish, we've got a place to buy puts. Now think about where your stop might be. See how that 5 moving average was support for a little bit? And it's just above the closing price today. What if we use that as a stop? And here's a little trick. Think about your reason for getting into the trade should be your stop. So my reason to buy puts would be that this stock has broken underneath its 5 moving average. It hasn't done that in a while. So if it goes up above the 5 moving average, should we hold on to our puts? No. So let's use that as our stop, right? That helps keep some of the emotion out of trading. So you want to trade unemotionally. That's super easy, right? Whenever money's on the line, it gets, yeah, stressful and tough. And so we always want to try to trade unemotionally. In fact, I have well, these guys here at home know, I have a class coming up in 2 weeks that I'm flying in a very well-known around the world wealth psychologist that travels the world and trains traders how to trade and keep the emotions with money kind of at bay. And I mean, it's awesome because when you're trading, we experience different emotions than most people experience. I mean, it's like everything you could ever imagine all in one while you're staring at a computer screen. It's crazy, but it's involving money, and money is tough. And so we get these emotions, and if you let your emotions go crazy, you're not going to trade well. And so that is definitely a part of trading, is to keep your emotions in check and think about money the right way. So Jane, we're having this class in a couple of weeks in Orlando, and Jane and I, she lives in the UK, and I'm flying her in specifically to work with charting and the psychology of trading. That idea of, hey, why am I trading? Well, trading because the stock broke below that 5 moving average. So don't count the pennies, don't count the money in the trade, don't count, whether it's going for you or against you. Look at that chart. Because if that stock goes above that 5 moving average and that was your reason for doing the trade, you don't want to stay in that trade any longer, do you? I mean, you can't. And yet, if you are in a trade that goes against you, if you ever have been in that position, you know that feeling, and we don't want to step out. We don't want to take that loss. And we want to hang on because just a little bit longer, it may go down again. Have you ever done that? I've done that. It doesn't work all that well. So instead of taking a small loss, sometimes we end up taking a big loss because we were just too emotional to think clearly. And I always say it like this: when you first get into a trade, you may be thinking about how much money you are going to make off of that trade and what you're going to buy with that money. I'm going to buy the new car. I'm going to buy a new house, do this, do that. And then when the trade starts going against you, all of a sudden you just start praying, I don't care if I make a dime, I just want break even. Right? It's the prayer, and all of a sudden, prayer strategy, and everybody gets super religious all of a sudden. Just please, just break even. I don't care. I don't need that new car. I just don't want to lose. Right? So you got to somehow keep those emotions in check. You will trade a lot better if you do that. And that kind of goes back to that idea of just focusing on following the rules, being a good trader. Not focusing on how much money you're up or down, but focusing on being a good trader. And then the money will come over time. Okay, so Goldman Sachs, possible bearish trade if it breaks down. By the way, if that is where it breaks, or if that's the 5 moving average, if that's where this chart is bearish, where will we have a bullish chart? What do you think? Where does this turn bullish? Can you see that line I just drew? I put these lines, again, I put these little horizontal lines to show me where I'm thinking it's bearish and where it's bullish. If it's bearish below the 5, it's bullish above the 5. Right. Look at that. Franklin just said, do you have cameras in my house? Going through all the emotions of trading. I'm watching you. I've hacked into your camera on your laptop. The fact of the matter is, we've all experienced it. I can sit down. If you're a new trader, or I mean, wherever you are in your trading career, if you've practiced traded or got involved in trading, I can tell you what you're feeling, what you're experiencing, what you're going through. Hands down, Bill can do the same thing because we all experience the same feelings and the same emotions. It's the craziest thing ever. My story, will be, you know, there'll have differences, but overall the emotions and the trades and the wins and the losses and, you know, how you feel around those, it's all going to be the same for us. So that's how we can help you. I mean, Bill always says, rent our experience, don't pay for your own. Trust me, it's much cheaper. I love that. I'm sorry, you had a question?
Yes, sir. When you're talking about the trade now, you're going to wait until it opens before you make any decisions. Do you ever do any premature setups to where it takes place?
Yeah, no, this is where, so the question is here, you know, are we waiting for the markets to open to do the setup? And here's the thing, I have, you know, I've kind of just arranged my lifestyle in a way that I'm around when the market's open. I mean, I live in Seattle. I certainly do not want to be anywhere at 6:30 in the morning, except for just barely rolling out of bed and the market's open. So I will wait till the market's open. I have my watch list here. And once the market's open, I start seeing if anything's playing out. I'll put alerts in as need be, and I'll manually place the trades. But there was a time that I worked a regular job and, you know, making the big bucks. 19,000 a year. but I couldn't watch the market open then. And some of you may not want to. You may have a life that you have a job that you love or something that you're doing that you can't watch the market open. That's where contingent orders come into play. And that's where you do all your research at night and you decide, okay, out of these stocks, these are the ones I like the best. I'm going to put a contingent order. So if this stock does this, if it goes up to this point, I want to buy this call option, right? Yeah, so I mean, this is what I love about the market. You can adapt it to fit your lifestyle. Yes, there is a learning curve. Yes, you have to work at this. But if you'll work at it, it's an amazing opportunity because you can fit this in any way you want. It doesn't have to take over your life like, you know, another job would. So you can fit it. I mean, I know people that will trade in the morning and then leave for the rest of the day and they just day trade for 2 hours. I know people that are end of day traders. They don't even look at the market during the day. They use contingent orders. They go home at night and they update their stops, manage their trades, put the orders in for the next day, and then they're good to go, right? I mean, so you can really fit it in however you want. And then, you know, I'll help you do that. Let me know if you have questions. We'll talk more about it, but I love that opportunity. Now look at Netflix. This has been a really neat post-earnings trade. They bounced on earnings right here. They created support. So this was earnings a couple of days ago. This is the gap down we talked about here in class. Their earnings came out. We have a giant gap down. And if we're going to trade, so I break up trading around earnings as a day trade the day of earnings. So right here, if you wanted to have traded that was a day trade. There honestly wasn't much there. It went sideways most of the day. I never found a tradable entry that day, but a lot of times there will be tradable entries. This one there wasn't, but you know, I look for it. So that's the day trade the day of earnings, and then a swing trade the next day if it breaks out of this candle body. So do you see how that candle body is highlighted with yellow? I've drawn a yellow rectangle, which is basically saying we could buy puts if the stock breaks down. We could buy calls if it breaks up above this rectangle. Now you'll also notice that Netflix is sitting at a support area, right? Because over here, the last time Netflix bounced, that created support, and that's exactly where the stock is. So I know it may bounce. It doesn't have to, but it could. So that's another reason to buy calls if it bounces. So the next day, we had a gap up, and this was a bullish entry Wednesday. The stock ended up, you know, being up $2 on the day, but so it gapped up, retraced, filled the gap. There's super neat patterns on that. Bullish entries there on Tuesday, and I'm sorry, on Wednesday, and by this morning, it gapped up again, but sold off. Now look at this. One of the things that I talk about, if you have a gap in your favor, especially when it's long in the day count, and Netflix was, this is the third day of here, hold on. We have our earnings yesterday. So technically it was a little bit of a bounce off of the opening price from earnings 2 days ago, right here. So yesterday's kind of the second day of the move. This morning, we're getting into day 3. If the stock gaps for you and then fails, you want to tighten your stop up and get out. So look at what happened this morning. And I'll just circle this and we can go back and spend more time on it later. But it gapped up, it sold off, it retraced again, and threw a long kind of a tweezer top right up there at the top. If you did position into a call trade yesterday, held overnight, this is weak enough to get out anywhere from there or down right here when it broke below the first 5-minute candle body. And that, I mean, let's just say you got out below the first 5-minute candle body. That's an exit at 87.50. And an entry over here yesterday was anywhere from 85.80 up to 86 and change. So it was anywhere from $1 to maybe $1.50 or so of upward movement there. Now, what do you think about Netflix for tomorrow? Is there a trade here? It basically becomes a repeat of what we had in a way a couple of days ago, because now it's back to that support level again. It came down to that support. And if you look, there's a little bit of a wick right there that came all the way down to that support level and bounced. So if this stock bounces, so first of all, overall markets, if they're really bullish tomorrow, this is more likely to attract buyers. So if the markets are bullish and if Netflix is moving above the closing price today, we have a place to buy calls because of support. However, if the markets are more bearish and Netflix breaks below support, could we use that as a place to buy put options? Yeah, exactly. Carolina's pointing out Netflix finished very strong. You go back to the 5-minute candlestick chart, you could see where at the end of the day, it was rally after rally after rally on that last half hour of trading. And let's see, that may give us a clue that maybe it's going to be a little stronger tomorrow. It's worth watching, but either way, we've got our trading parameters. So we know at what point we want to buy calls. We know at what point we want to buy puts. All right, so just a few more stocks to go through with you guys. Priceline, I think, is worth watching tomorrow. Now, this is a more volatile stock, but it's worth watching tomorrow because they also had a retracement, and that retracement brought it where? Right to that blue line, which is a 10 exponential moving average. So if it breaks below the low price today, that's a break below the low of all the last 3 days. That's a place that we could say, look, I mean, it's just topping out. This stock is likely to come down. Somebody asked me earlier what toppy means, or topping out. It means it's like a mountain top, right? It's rallied, all it's going to rally, and it's breaking down. So if it starts to sell off and breaks below the lows of the last few days here, this is a place to buy puts. You'll also notice it closed right below the 10 moving average. So what if the markets are bullish enough for this stock to rally back up above the 10? Could that be a place to buy calls? Absolutely. And Priceline, heading into a Friday, Priceline could be a great day trading stock. Tesla is another one. Did that same thing. And at the risk of sounding like a broken record, it's the same trading plan here. Tesla has come down to an area of support. If the markets are bullish tomorrow, I love these stocks that are trading near their support levels because they have more room to go up. So they've come down low enough that they have more room to trade higher. So in something like Tesla, watch this, a rally above the close. Sometimes you can even scale in. So it's bouncing at a 50 moving average. We could enter calls on a rally above the close, and a little bit higher is a 10 exponential. We could enter a trade there. So you can scale in. If you normally want to buy, let's say, 10 option contracts, you could buy a few on the first entry, and then you could buy a few more as it trades above the 10 exponential moving average, right? Something to think about there. Where does this chart turn bearish, by the way? Do you notice that it bounced right at a 50 exponential moving average? You see that? That's the green line. So would you guys agree if it breaks down below the green line? That's a break of a support. A 50 moving average can actually come into play fairly often in a stock, and it can be a strong turning point. So if the buyers don't come in at these levels right here on Tesla, we may be in for a pre-earnings sell-off. And they're likely going to be announcing sometime the first week of August. Okay, next we have Union Pacific. They're on my list because they did announce earnings this morning. So they have already reacted. But what I'm interested in is they closed right at a 20 exponential moving average. There we go. Scott said doji at the 20. Right there. So if this could bounce, and we could use this as a bullish entry. Sometimes you'll get things, they're overdone. A lot of times news causes things to be overdone. So if you're a hedge fund manager or an investor and you go home and you're looking at Union Pacific's report and you're thinking, well, maybe I still like this stock. This lower price would give you a buying opportunity. So if the markets are bullish, especially, and if this is bouncing above the closing price, this could be entered as even a longer position as long as you have a stop below the 20 moving average. So you're not taking on a lot of risk. Right, you've got about 30-cent stop there, so you're risking about 30 cents on a trade like this. But that's a little bit of a post-earnings trade. And then to wrap up VMware was on our list from Tuesday night's Traders Talk because of their earnings gap up. So just like I showed you the Netflix trade, where Netflix had gapped down on earnings and thrown that little doji at support, now we've got VMware that gapped up and had a little doji. Now the doji, looking at a longer term chart here, you'll notice the doji wasn't, it's not like it was at a major resistance level, a little bit of one from a previous kind of gap down, choppy area. But we're looking for a breakout of that candle body. So let me come back over here, zoom in, and the next day, where Netflix had gapped down and it went up, this gapped up and went higher. It is tradable to the upside, because sometimes even when they gap up, they keep going higher. So you have a bullish entry as it moved above that candle body. So we're on 68.58 as it moved above my yellow rectangle there. Zoom in here. So that was our entry. The stock was up 2 days in a row. And you see what's happening today? This has gone up $2. What happened? Here, let's look at it like this. Oops. What happened right here on the 5-minute chart? You could see it. What happened is that the stock rallied, and right about here, you guys at home will probably recognize this is a Bollinger Band top. If you were, so here, this is where it's kind of cool. If you had purchased these calls yesterday and you saw this Bollinger Band top developing, by the time you got that bearish engulfing candle right there, that is an exit out of your call position. And that price point, let me take my drawing tool off and I can tell you. That the exact price point was around $71.65. And the entry was over here at $68.50. So we are just over $3 there. Now, let's say you're one of those traders that you're more of an end of day trader and you didn't see this. Is that okay? Do you still have profit? Yeah, you still have profit on the trade. So you know what you can do now though, because there is that long wick at the top that you see here on the daily chart. This is the first sign of weakness. So should you take your stops and move them up real close? Yeah, I think so. This is where you protect your trade by tightening your stop up. So you may have had an entry around $68.50. The stock is closed at $70.90. So we're, still, this is a good trade, right? You're still over what, over $2, $2.50 or so. Don't ask me to think about numbers. I can't. I need a calculator. But what we can do is we can snug our stops up. And one of the things that I teach, I also use moving averages, and I love the Bollinger Bands. And if you look at the Bollinger Bands, what you're seeing right here is we have a Bollinger Band pinch is what this is called. And when a stock does this, that lower band of this bottom line right here tends to act as support. So you could tighten your stop near that lower band, which puts your stop right around that 78.60 area. And that's to protect your call position. If it goes up tomorrow, then we move our stop up again. Make sense? All right. So this is it. These are my trading ideas for tomorrow. And what I'll do is I'll start out the market here off of the chart patterns. I'll see how the market's open, see what's playing out, and then I'll run through my scans and see if there's anything else that is moving tomorrow that we want to pay attention to. All right. So you guys at home, thank you so much for hanging out. The meeting at an earlier time. I really appreciate it. Tom, you're very nice. Sorry, I laugh. He called me a genius. Sort of, right? He says, your explanations are so common sense and understandable that is a true sign of genius. So I'm going to tell all my friends. But you know what? Oh, and this is your first time here. Well, welcome. I'm glad you're here. But you know what? To me, honestly, I had to simplify this to understand it. There are so many moving parts in the market, and it is so overwhelming, and it can be so complicated. that's not where you make your money. You got to think about these in, well, I think in simplistic terms, break it down into the core, what is really important here. And I think if you learn to do that, you can really get this and find some huge advantage in the market. And I think you will learn to love it as much as I do. Hang on real quickly. Lisa wants to check out Lulu. Let's check this out. So they've had a really good retracement here. And this is another stock that I would add in that camp that is retracing, that potentially we could look at a bullish entry if it has some kind of a bullish engulfing candle here. And being a retail stock, they aren't even announcing earnings till September, so we don't have something real close by to worry about. All right, and yeah, Tom, this is recorded, and so this will be uploaded here shortly, within about an hour, and you'll see it in your account page. You can go in and watch the recordings, all right? All right, so guys, thank you so much. I appreciate you joining me. And remember, all of you that are regular subscribers, I've also given you an extra session. So this is just kind of like a bonus session for you to hang out. It doesn't count against your subscription, and you've already been extended. You have another session coming up. It has not been applied yet, Scott says. I will make sure that it is. Thank you. All right, you guys, thanks. Have a great night. Happy trading tomorrow. Have a good weekend, and I will see you next Tuesday night.